All right, good morning, everyone. Welcome to the fifth session of the 117 Halal Fund discussions. I remain Imran, and I've been hosting this event, although today I'll be hosting it on an audio platform only, as my video system is not convenient at the moment. And inshallah, today I will be with our portfolio manager, Mr. Isiaka Halidu, and he will be running us through a couple of discussions around the management of portfolios and the benefits. So the head or the topic of this discussion is going to be the role of portfolio management in ensuring steady growth and investor security. So welcome on board, Mr. Isiaka. Are you there?
Yes. Assalamu alaikum. Thank you, Mr. Ala Imran, for having me on this session.
All right. We're going to dive straight in. So Mr. Isiaka is our portfolio manager at 117 Capital, and so he understands the nitty-gritties of what is going on within the how portfolios, individual portfolios, the halal fund portfolio is being managed. So, Madam Isiaka, could you start by telling us what portfolio management in and of itself entails and its importance in the investment world?
Okay, thank you, Imran, for that question. Portfolio management generally, I think the investment world can hardly thrive without portfolio management as a way of definition, I would say, sort of what portfolio management is. It is simply selecting, managing, and optimizing some classes of what I would say either assets, projects, or investments. So when you talk about portfolio, you are saying you are not having just a single class, you are not having just a single investment, or rather you're having a class of investments. Not having a project you are managing, if your business is into project, you are not having just one, you are having more than one, you are having a class of it. It's an asset you are managing, you are not having just one asset, you are having a class of it. And there is a wisdom behind that, especially in the investment world, because the investment world is a whole global spectrum, or it's rather it's an interconnected, it relates to different interconnected, whether you want to call it situations that could also affect how you do businesses. When you understand that in the business world, then in other words, the technical, say it attracts also for risk. One way to do that is to see that as an investment, because there's always a trade-off between risks and returns in any investment processes. So what portfolio helps you to do is to create the balance, the well-needed balance between minimizing risk and also optimizing your return. I don't know, maybe when we go further into the discussions, we'll be able just to keep this brief to understand, okay, what is then that connection between portfolio management, risk minimizing, and also return maximization. And so when you have, rather than a single class assets, you want to think deeply to say, rather than a single asset and having a class of assets, you want to say, okay, if I have an asset that is faced with this particular problem in this sector, I want to take sector-wise, I should have another asset that should have an opposite effect of whatever negative effect that will come with that other sector. So you have assets in different sectors, if you want to put it, if you want to mention sector in different classes of investments, such that if anything goes wrong here, the other one will be able to balance that same wrong not happen in the other aspect of the asset. And this is all what portfolio management is. And if you look at what we've just said, you see that it would be practically impossible for an organization to thrive or investment world to thrive without a proper management process. Okay.
All right. Thank you. That has been extensive. Basically, what you're saying is portfolio management is how we manage the various asset commodities projects within one's portfolio that is that one expects to generate profits for him throughout his investment period. All right. So the next question we're going to ask is meant to be specifically about the mutual fund, but you could digress into even the private portfolio. So how does 117 Capital's portfolio management department ensure the stability and growth of the various portfolios, the mutual fund, the private portfolio, and others?
For that question. If we look, let's start from the mutual funds, then we can digress into private funds. You see, essentially, basic characteristics of the mutual fund can be summed into two. One is about safeguarding the long-term capital. The other one is also about creating and preserving. It's about creating and preserving value. And you could say it's about safeguarding the capital and also ensuring that while you safeguard that capital, there is also return. So essentially, we say that is the essential objective of the mutual fund, because for every investor wants to see that when they plow in, no investor wants to invest money into an investment with the intention, of course, we agree that there are risks, but of course, the intention, the goal is to ensure that we maximize return. And you cannot maximize return when your capital is depleted. So if you then look at the mutual fund having this as an objective, then you now go back to the background we've said about portfolio management. Because what portfolio management do is to see you want to allocate your financing or your spending, in the case investment, your investment into different classes of assets that gives you maximum return. In this case of mutual funds, that also preserve your capital. Because the mutual fund, why you have a mutual fund is to have people who do not have that investment sense and say, okay, I can go into a collective investment scheme where with my small little fund, which I don't want to deplete, I could be why lying or why laying my shoulders along other investors, and also with the help of an expert, I'll be able to preserve my capital and bring return. So to ensure that our investors to the mutual fund achieve this goal, what do? The mutual fund is the strategy that we do not just invest in one particular class of assets. We look at different classes of assets. And what is also more important is to say also, in the mutual fund, we are also looking beyond in the investment fund called the traditional asset classes. We are looking far deep into alternative investments. And what do I mean by that? The traditional assets classes are investment in stocks, equities, and maybe cash, do a placement in a bank. Beyond that, we are looking at investment in places like real estate, asset-backed contracts, especially because we are also a Sharia compliant firm. And for whatever we do in terms of investment, there must be an asset underlying it. So in all of this, so we have created a proposed asset class where we also have ranges in terms of maximum and minimum ranges to say if our mutual fund is going to have comprises of equities and we have a cap to say cannot exceed a maximum in terms of percentage, let's say 10-20%. We also have fixed income. And the essence of having, you see, equities are volatile because stock prices can go up, down. And when you lose it, if you say you want to, and this is where also portfolio management comes, and there's a relationship in terms of what we call diversification. Now, again, when you speak about the portfolio management, I would say you cannot speak about portfolio management without diversification. And what is diversification investment? I would say they are they are not mutually exclusive when you talk about portfolio management. It's like the simple English you want to use or the simple terms that will make people understand it. Say the common term is to say you don't want to put your egg in one basket. And what does that mean? If you put your egg in a basket and that basket is a single basket, all of your eggs, and that basket falls down, means your whole eggs are gone. You do not have another egg to eat. The same thing applies to what we are doing here in the mutual fund at 117 Capital, also in terms of our investment strategy. We are not looking at investing in equities because, for example, I invest in a Sharia compliant equity. I buy the stock of a company. Let's say because of market information, the stock goes down. It means there will be a complete loss. But I'm looking beyond investing in equity and say, okay, I want to invest in fixed income. A percentage should go to fixed income. A percentage will go to equity. Yes, there's a restriction in fixed income because remember we said there is a trade-off between risk and return because in fixed income transactions, what you have is a guaranteed return. And because of that, the return might not be that might be good for investors. So you have a fixed income, but again, you are guaranteeing your capital, which is also in line with the objective of the mutual fund. Because also you want to increase the value of that fund, so you also look at investing some part of your funds into a more risky investment with potential of very high return. And when I say risky assets, it doesn't mean that we're not calculated. It's very calculated. So you want to see at investing in some asset-backed contracts going through some using the basic contracts you have, the Sharia, like the Muraba or whatever, and going. But of course, it comes with your own risk because you feel more like trading in real assets. And you want to keep some cash also, very minimal, so that whatever goes wrong, you have a buffer. So if you look at what we explained, we have as a summary our mutual or halal fund, having investment in quick equity, fixed income, asset-backed contract, real estate, cash equivalent, and this is in line with the concept of portfolio diversification, so that we can there will always be a balance, and every point in time we go here, we exceed this percentage, we always call ourselves back and bring it up. And whenever everything goes wrong, let's say in a particular sector, let's say in the equity market sector, you have the fixed income return balance that off. So if the fixed income return is low, you have the equities when it goes high to balance up, and it's also the equities returns are low, you have the asset-backed contracts to be able to give you higher return and compensate for whatever minimal return you've got in equities, and also preserving your capital. So it's simply what the halal fund is about, and the same concept is what we apply even in our private equity, in our private portfolio. Because we are a company, because we have the extra layer of to be more careful, because we are Sharia compliant firm, we have another extra layer of responsibility to our clients. And that, apart from the fiduciary responsibility, we have that we are compelled to maintain the trust of our client. Because what do I mean by trust? Because we have come out to the public to say we are Sharia compliant firm and we are experts in how to invest, to put your money into investment that will give you good return, need to maintain that trust. So because of that, we must develop robust investment strategy, whether it relates to the halal fund or to private individual, to ensure that funds they're giving to us give them the maximum return, preserve their capital, and they continue to meet their own need to whatever return they generate. So essentially, this is what we do in 117 Capital. Thank you.
All right, thank you, Isiaka. You also touched into what I was even intending to ask next, um, which is the which is the what's the name? The diversification thing which you've delved into. So yes, one key in ensuring that one thing in ensuring that there's growth in portfolio is the diversification as well, and ensuring that things that helps in balancing risk for your investors. So the next question I'll go into is with regards to inflation and wealth preservation. So with the high rates of inflation in Nigeria now, how does portfolio management, or how do you guys in portfolio management help to preserve and grow the wealth of investors, considering the fact that people might say, I would invest in 1 year now, inflation will chop the money. So what is the wisdom being put in place?
Okay, thank you for that beautiful questions. And one reason why people in the first place will bring their funds to you as fund manager or as an investment manager is because one of those reasons is to beat inflation. Because if you keep money idle, it's eroding the value of that money with inflation going higher. And what does that mean? I'll give because of the audience we have. I do not know the classes of audience. I will say, for example, you just keep 200 naira in 100,000 naira in your house, and then the value of that 100,000 naira actually can buy you, let's say, a Samsung phone. Let's say Samsung. Just as a scenario, let's say Samsung S or Galaxy X with 100,000 naira. Now, because inflation goes up and prices or even commodity foods have gone high, when you go to the market the next week, because you kept that money at home and you'll be able to use that money to purchase that Samsung. So the ideal team, and this is where we as fund manager comes in, is for that person to say, because I do not have the use for this money now, I should take it to a fund manager, such that he'll be able to produce for me a return that even when inflation goes higher, I should have a return that should compensate for that inflation. So, for example, if the price has increased to 200,000, as supposed to buy the phone today has increased by next week to 105 naira. The goal is to look for an investment outlet or to an investor who is able to deploy that fund so that when that next week comes, you have a return plus even an extra change to say I can get a return of 105, 100, and 200. So that you keep the value of your money in relative terms at the constant power over time. So now what is then our role as fund manager in terms of wealth preservation, in terms of investment in management? Because as wealth manager, what we do, key things we do is about preserving people's wealth and also managing their portfolio. And I think this is also not fact. In Islam, it is encouraged. I think if I could relate, essentially, it also relates here. Surah to Yusuf. There should be chapter 12 of the Quran, where Prophet Yusuf, when he was interpreting the dream was about preserving, to say, okay, you have to keep because there will be so scarcity of farmer in this thing. You have to be delayed before that. You have to keep some portion of whatever you harvest and all of that, compensate for that. If you look deep into it, it's also related. And if you also come close to, I think, other verses, if you look at Surah to Al-Araf, and I think, in Surah to Al-Araf and Al-Israel, where Allah was talking about not being excessive. So what that means is that you should also have a portion of your something. You should moderate in terms of how you spend to keep some, and also for preservation of wealth. in all of this is also meets, in all of this is to say that you are able to preserve your wealth, and also just to relate it with all of the examples given from also to meet up, whether it is inflation or foreseen circumstances that come in the future. Then what is the role of us as portfolio managers? Somebody who have said that I do not have that expertise, that I have taken my fund, I know inflation will go high, and if I keep this money at home, and they are giving us that trust to say, okay, take this money, pull up investment. So what do we do? Especially what we do again, because portfolio management is all about having the sense of investment, knowing where to put those funds. One is to do our due diligence, understand the sectors that, how the Nigeria, whether it's the Nigeria economy, whether it's global economy, how the trends are moving, understand that sector that gives the best return. Also, deploying expertise in diversification portfolio management to ensure that the same thing revolving around what we've said, not to keep those funds in a single asset class that will run us into serious risks of depletion of capital. So none of us should have alternatives that can serve as buffers, so at every point in time we compensate one kind of border. So this is essentially what we do as portfolio management. So when we get your fund, to avoid the risk of losing out your capital for inflation, deploy those funds into investments that generate good return, investments that will not deplete capital, because if you deploy it into investment that depletes capital, you've also completely not just about losing out in inflation, also completely lose out the capital itself. Yeah, but this is not without saying that investors should know that, yes, why it is our expertise to do this. And because, of course, the Sharia says that the basic concept of Islamic finance or Islamic this is to say there is no fund without risk. Investors will be able to take and to say deploy funds into a risky place that also necessitates or takes profits. But in doing this, we as the experts to ensure that we give those investors a diversified portfolio, where even when we lose out in one risky venture, the other one will be able to compensate, just as we said. So thank you.
Yeah, thank you very much, Madam Isiaka. So as the conversation is going on, I would like to engage with the audience. So with us here, we have Muhammad Abdul Salam, Iman, Amadou, Al Hussein, Lukman, and Senator. Senator. It's like this, you're going to give us like 100 million. Anyway, I'd like to engage the audience to hear what questions they might have for us, for you, and probably for me before we, and if there's none, then we proceed with the further conversations. We have like about 5 to 10 more minutes. So please, we need to hear, are there contributions, are there thoughts, are there questions? Yeah, Al Hussein, go on, please. You can unmute your mic and speak.
Yes, thank you very much, Imran. And I joined late. Sorry, I just remembered and I quickly joined. I missed some of the things you spoke about. However, I've had an experience. I myself, given that the kind of employment I have is with NGOs, so it's mostly based on contracts, and sometimes sometimes you're on the job, sometimes you're not. So whatever you get, you will want to invest it to see that you can continue to sustain yourself. So I have engaged in some kind of business with that is halal, so to speak, where I get some percentage of return after each transaction. So what the guy engages in, sorry, I'm sorry, if am I allowed to go on I want to explain something so that you hear where I'm coming from, so I'll understand what you guys are offering. Is that okay, or?
Okay, go on, as long as it's not too long, so that we give other people the chance to ask as well.
Uh-huh. Okay, let me see how I'll summarize it. Okay. So what the guy was doing was he was engaging in the buying and selling of grains to these companies. So we get returns from around 2 to 3%, right? So after every transaction, but I realized that I could get something better if I also engage in the business myself. But I have been in business and I have faced some challenges. So I realized the importance of having experts or people that have experience, and that's why I joined this space, this meeting here today to understand. I have seen most of your messages, so I wanted to understand what is it that in terms of of recent also I've understood the concept of interest and its various forms and the understanding of how our money loses value you get when it's in the bank and whatnot. So I want to know how does the investment you are engaging in will ensure that I'm profitable and I'm still maintaining, the value of my wealth still after the transaction, because sometimes you may make profit but the value of your money has reduced at the end of the day after this transaction. You get my point?
Yes, I do. So,
Thank you.
Ishaka, do I answer that, or you want to answer that?
Yeah, would you want to? I think just go ahead and answer, Mala Imran.
All right. Hussein, thank you for this question. So I'll be very brief with it. When it comes to generating profits and how we ensure you generate profits, like Isiaka had already mentioned with regards to how we ensure that while we are pushing for profits, we are also very careful to deal in very safe havens and safe environments so that investors do not lose their money. And our track record over from inception in 2020 up until now, we have never declared a loss on any fund. So when it comes to ensuring profits, our portfolio managers put in the best work through diversification, through product knowledge, through the financial engineering part of it to know what maybe equities might perform and which not to buy and all of that. So that aside, when you now speak about preserving your wealth, one thing I would say is you have a couple of options, right? You have the option of keeping the money. You have the option of running a business yourself, which is also time consuming, effort consuming, and you have a chance of the business not working. Meaning, because I've run a couple of failed businesses in the past, so which I've invested highly into in the bid of making a lot of profit. So that is there. And then you have the option of giving a fund manager that will run it on a Sharia compliant basis and they generate profits. So while the country, so this is now from a personal point of view, while the country is, if you have an investment that is locked in for a year, for example, that will give you 20%, and you're going through and you see that you as yourself, based on your market, see that inflation might might go above 20% before the end of the year, which means your value might become less than what you're being promised. What I will now say is, first of all, from 117's point of view, it is not a fixed thing. And 117 also sees that trajectory of inflation. So the transactions are not like, they're not fixed. So we're going to look out for transactions that would aid us in beating that inflation rate so that no matter what, your money is above that level by the will of Allah. Then from a personal level, what I've done in the past is that when I see that this is what is going to happen, I myself, outside my investment companies, have diversifications. I have a gold fund, I have a commodity fund, and I say, okay, which one is going to perform above inflation? Then I take some of my money from the one that will perform below inflation and put it in the one that will perform above inflation. So while fund managers are doing their diversification, I personally do mine, and it has always aided me in beating inflation and keeping the value of my wealth. So I'm hoping that this answers it. Hussein?
Thank you. Yeah.
All right, thank you very much. Do we have any other? I have Fatima here, I have Amina, I have Silifa, I have Lukman, Senator Hamadu, Iman, I have Muhammad. If you guys don't have questions, we are going to just send you forms for you to fill. Lukman has actually filled my form, so yeah, great. Fatima has filled my form as well. I know the names of people that have filled forms. Amina has not filled my form, nor has Silifat. So Silifat, you don't have any questions?
Hello, good morning, everybody. Sorry, I joined late and my network is bad. Though I don't really understand what you people have explained so far. I don't know if there can be a recap. So, or I don't know. Because I joined very late.
Okay, there will be a recap towards the end. So
All right.
that's Silifat will keep that in mind that you need a recap. What about Senator? Okay, Muhammad, you want to say something? Go on.
Good morning, everyone. Can you hear me?
Good morning. Yes, we can.
Yes. Okay. So I had a few questions. I joined the last session late, and I was actually joined this one to kind of late. I wasn't really concentrating because I had something I was doing. So my question is the basics about the mutual funds, like the minimum amount of months. Then if there's like a range of returns on the amount. Let's say, for instance, if it's like for 3 months you get 10%, or for 6 months you get 18%. If it's like that, or the percentage on it varies. And also, how do how how do we start? I am hearing something about a form or something, so I don't really know how to start and how is a process in place to monitor your listing and the process of taking out your investment and your returns, or the process of reinvesting it back also. So that's
So
I'm like,
basically, you want a full overview of the mutual fund.
sorry?
I said basically you want a full overview of the mutual fund.
Yes.
All right, so we'll do that, and that will cover both you and Silifat's question. So is there any other person so that we know if there's anything outside this so that we can incorporate it? We can answer that before we give. This will now be, Isiaka will give us a full overview of the mutual fund, and we would end. So is there any other thing? Iman, do you have any other thing? Hamadu, do you have any other thing? Okay, great. That's fine then. So, okay, Taslima has filled my form, so no need. But welcome on board. So Isiaka, you got what they're looking for now is just specifically on the mutual fund. You could give us a full overview on what is what the mutual fund is about. So what will happen is I'll ask it in form of questions based on points. So I just ask you, just give straight answers on each point so that we're sure that we've touched every point. So Isiaka, first of all, what's a mutual fund? Quickly.
Thank you, Imran. So a mutual fund is just a collective investment scheme. Not to go technical, it means you are pulling investors' funds together using those funds to invest. One way you want to look at it is like technically, is like you are owning share in that fund because you are buying units. So if you also translate it for most of us, because with what we are conversant with. If you look at maybe all of our looking at stocks, Sukuk also, just like you buy units as certificates, it's closely related to that. So you have units in the fund and you have other investors with the units. So there's the maximum amount of that fund in terms of units. So each party buys some of those units. And then it is then invested in investments that generate all since we're halal fund is strictly on investments that are Sharia compliant.
All right. Thank you. So I hope we got that. He mentioned that it's a collective investment scheme where you pool money from various individuals and then invest it into diversified portfolios for us to generate a profit. It's a Sharia compliant scheme, which means every transaction has to be in accordance to what the Sharia would approve of. Then he also mentioned that it is unitized, meaning just like the Sukuk bonds, and you're going to buy them in units. And the next question, which I was going to ask, I'll just answer that. I'll add that to it, which is the entry amount is 10,000 naira, and then in multiples of 1,000. And a unit currently is 100 naira, and one could buy a minimum of 100 units at that now, which is the 10,000 naira. And then, like he mentioned, he said that I think he mentioned something about the how you can buy and sell shares at certain periods. So same thing with the units, can be bought and sold at the current price of that day. So that summarizes what he said. So the next question I would ask is there, that's the question which Mohammed asked, is there a rate? Is there a rate that one could expect in terms of profits?
There is a benchmark rate for it's just a benchmark rate to say we're expecting to have the fund as at a 16.73, which is benchmark, right, to a particular school to say, okay, on the average, you should have even within 16% or thereabout in a particular period of time. This is what we expect to deploy in terms of our expertise to generate on that front. Now, at every point, that is a benchmark. We expect to grow it above that because, again, that is in the end of it, it is how much returns that it's all back into the fund that determines the value. So that an investor who has invested, say, 10,000 naira minimum today is able to smile back at the end of the year or whenever he wants to sell that unit. Say, okay, I have invested in this period of time. I want to swipe up with very huge return.
Okay. Now, so
Imran, I have a question.
Okay, let me just recap on what Isiaka said. So he mentioned that there is a benchmark, that this is benchmarked to the current performance of the FGN Sukuk 4, which is around 16% or so thereabout. And yeah, this is what he mentioned. And he said that it's a benchmark, meaning it's not a fixed. A benchmark is that we're telling you this is what we're expecting to perform, but efforts are being put in by portfolio to beat our benchmark. And part of the things that 117 can boast about is that in almost every year we have beat the benchmark that we set for every transaction. So we're hoping to beat the benchmark, but we give you a benchmark so that you can plan against it or estimate your returns around it. And then when we beat the benchmark by the will of Allah, then you have a surplus, hopefully. So yeah, Al Hussein, please go on with your question.
All right. My question is this: we know that in Sharia compliant businesses there is either profit or loss, right? Although you've reported that since you started in 2020, you've never experienced reported loss. However, I'm not concerned, sorry. I am curious as to what are the measures you've put in place, or how do you manage funds in such a way as to prevent any of your partners or your staff from fraud, and also to ensure that our monies are safe if we do invest. And also, probably I will have to have I don't understand how the units work. How the units work, and then I would like to know, for how long can someone invest for? You get, and if we will have certain ideas or the kind of commodities you trade in, do you go to the stock market, or do you actually engage in investment like you do buying and selling or production? What do you actually invest in, so that we will understand the kind of risks that are involved?
Good. So I've taken the points from your listing. So first question, Esiaka, is it has been mentioned that you've never declared a loss. And with regards to how do we ensure, I think that point has been battered upon in terms of diversification, the financial engineering that comes with it, the research, what the research department does as well to ensure that they are trying to forecast any form of shakiness, and then how we try to deal in stable grounds. Example, Sukuk, which is 100% guaranteed by the FGN. So having a large chunk in Sukuk to prevent any harsh blows from riskier transactions. So that has been discussed. But let's assume that a loss happens. Now, this is based on assumption because anything can happen, but the steps Isiaka has mentioned that has been put in place makes it very unlikely. But Isiaka, let's assume it happens. What does 117 have in place to ensure that investors do not go home unhappy?
Okay, so let me understand the question. First, that is it that we've what we have in place to ensure that there is no loss in the transaction, or that investment, is that the question?
So no, that is the question, but that has been answered in your discussions, and I think I also buttressed upon it with regards to how we deal expertly in those transactions to ensure that there's no loss, and we've succeeded from our inception up until now. But now this question is quite hypothetical. What if a loss, maybe the transactions or your portfolio now performs at 0% or a -1, -2%? Do you have anything in place to ensure that investors do not have a very harsh hit by that loss that happened?
Essentially, within the period the fund grows, it is unlikely to, because if it does happens, then it's going to be an issue with us as the portfolio managers. And that is why we've given an asset allocation strategy that shows that it is practically almost unlikely to have that. And one of those is to also have some part of the fund in a fixed income generating fund. Because one thing you understand is that the fund is like a perpetual stuff. So investment balances out at every point in time. And yeah, it will grow. But one thing is that we want to keep the fund at the minimum, that it should not go less than the actual value or the face value of the whole units, if you understand what I mean. So if the face value of the fund itself is 5 million units and the price itself is 500 billion naira, when you convert at issues, we want to make sure that even in the absolute first sense of the fund to grow,
I can't
grow it
hear.
above the 500. Can you hear me? Can you hear me? Hello,
Yes,
can you hear me?
yes.
Yes. So what I mean is, when at the IPO, the launching of the fund, what you have as a face value for that fund is, for example, 500 million naira in terms of the monetary value, and in units you're having 5 million units. So our role now is to grow that value above that 500 units. One of those ways is because we've said we invest in fixed income generating units like this Coke. Automatically, that has already grown the units. Now, what you may have now could be, so it is almost unlikely to have it less than the fund. What you then have in the future would be a case of a fluctuation in terms of the return that comes in. So today you may have, because of maybe also because of the rates and economic activities, you could have the fund going up in terms of the value of the unit and down. But at every point in time, we don't want that value to go beyond what do you call it? The minimum face value of the fund. And yes, because and that is why we have the option of a fixed income generating asset living within Sharia compliance space, like the Sukuk, investing in Sukuk and all of that. Now, because again, the Sharia acknowledges that you invest in investments that could lead to loss. It's that same reason we have said we are not just going to invest in one particular sector. We are going to diversify it, and the onus is then on us to ensure that not at the end deplete the fund below its value.
Now, so that takes us to his second point, what you just mentioned. What you mentioned, diversifying this fund. Do you have any particular sectors or particular transactions that, like you mentioned Sukuk, so we know Sukuk is part of what your funds go into. So he's trying to know what are the other sectors that these funds go into.
Okay, so if you at the beginning of our conversation, we've said that we have a strategic asset allocation for the Halal Fund. And essentially, we are looking at classify that into about 5. And each of these, we have the equity. We are going to invest in equities, of course, Sharia compliant equities. We are going to invest in fixed income investment, and within the space, because we're Halal Fund, we'll invest in Sukuk. Federal government is launching a Sukuk plan, and it come out at a rate. The last one was at 16 points. So you expect a Sukuk within maybe, no, we cannot say, but maybe 16, 18. So you already have a return on the fund if you can invest in that. We also have asset-backed contracts. One of the things we want to look is to say, okay, we'll deploy the funds into a Murabaha transaction, into a Nigeria transaction that will return a very good return. And if we are doing a Murabaha transaction, we'll ensure that we do the due diligence to return. Look at real estate investment also as a maximum we can invest in that sector. Then we'll keep a minimum of 5% of this fund as cash. We can place in an Islamic bank as a term deposit. So this also generates return, just that the return is not going to be higher. So we have a 5 proposed asset class: equities, fixed income, asset-backed contracts. The asset-backed contract will be any of this, deploying any of the Islamic finance contract to ensure that there's an asset underlying the transactions. We have real estate, and then we have cash and the cash equivalent. When we say cash equivalent, any instrument that the Sharia compliant that we can convert the money. If they say give us a cash today, we can convert it to cash, and we're looking at a minimum of 5% or thereabout for that. So each of these has a maximum rate, and we are not just going to stick to one asset class.
No, I think that answers extensively. All right, let's take Hamadu. We have like 5 minutes left. Hamadu, you can go on with your question.
Assalamu alaikum. Thank you very much, Malam Imran. My question is concerning the practically when an investor gets the 100 units of the mutual fund, what is the minimum period to retrieve the capital and the interest, or just to retrieve the capital? Is it 3 months, 1 month, or a period of 1 year?
Let me get it well. When a person buys, let's assume you buy 100 units in January. So you're trying to know when would we pay you returns? Is that what you're trying to know?
Yes, the minimum period, or is it fixed, or it depends on every investor?
Okay, so this is one part of the fund we did not mention. So if you buy, let's assume you buy 100 units a day. There's what we call this fund, like we mentioned, like Isiaka mentioned in his last answer just now, he mentioned that the fund economic activities begin to happen and the fund value begins to fluctuate, meaning now it's 100 naira, an economic activity can happen, and then in the next few weeks, it's selling at 102 naira. So in that format, we have a lock-in period of 3 months because this fund is open-ended. What open-ended means is that people can come in and come out at any time, meaning you can buy today, you can sell, you can come in and come out at any time. However, there is what we call a lock-in period of 3 months, meaning if you give us that money for 3 months, you're not coming to take it out. But after 3 months, if you say that, okay, I need some of this money, I want to redeem some of my units, I want to sell some of my units, basically, then you sell those units at the price of that day. So if after 3, 4, let's say after 4 months, the fund is now at a not face value, I'll call it, at the current value of 110 naira, for example, meaning you bought it at 100 naira, it had gained a 10 naira profit on it, and you say, okay, I have 10,000 units, I want to sell 5,000. You will now be selling them at the face value of that day, meaning you're not selling it at 100 naira that you bought it, you're selling it at 110, meaning you've already made a profit. As for when the fund would say that, okay, we want to share profits, it happens once a year, which is at the end of the year. It happens at the end of the year. So at the end of the year, the fund will come and say, okay, we've generated 16%, 20%, whatever percent after the whole management of the fund, and we are sharing profits. So we are dispersing profits to individuals. So it's now up to you to say, okay, I want to take the capital out as well, or I want to leave it and continue the fund, because the goal is that the fund is perpetual and keeps running. So if you say no, at the end of the year, whatever profits you've gotten, give me the profits and the capital, that's up to you. If you choose not to stay up to a year as well, that's up to you. It's open-ended, meaning people come in and come out. And even if you put money, let's say for people who are salary earners and say, okay, I want to be saving 50K every month, you can always be buying more, meaning you've put 50K today, it's growing. I have another 50K next month. I want to add it to my current fund. It continues growing in that format. So there's no, aside the 3 months lock-in period, there's no restrictions on how you can add or you can take out your money. You will just take it out at the current value of that day, whatever had already been generated up until that period. So I hope this answers Ahmad.
All right, thank you. It's very clear.
All right, thank you. So do we have any other questions? Okay. Someone wants to say something? Okay, then. I think that will be it. It's 11. We've even stayed beyond what we planned, but it has been a very interesting conversation. So firstly, I want to thank Malam Isiaka for joining us today and helping us to break down some of these nitty-gritties of portfolio management, which we do not know. And then also, I want to thank all of you who joined the meeting today. It was this is the most engaging one I've had, and everybody, Al Hussein, Hamadu, and every other person, Mohammed, have tried to contribute their bits and ask questions. So I would hand over to Junaid to tell us the website, the numbers to reach out to, how to connect to us, how to get your forms, and everything. So Junaid, thank you. Is Junaid there? All right, I doubt if Junaid is there. So for you to contact us, you could just go through our website at www.117, ONE, digit 1, digit 7, 117capital.com. You would find a link to download the forms. You would find our contact numbers as well. You find our office address at Mukhtar El Yaqub Place at Zakaria Maimalari Street at Central Business District. You will find numbers to call. And for those of you who know me already, you can contact me directly and reach out to me. If you want the forms, I could send it to you. Mohammed, you mentioned trying to get the forms. Just call on any of the numbers on the website, or just reach out to us via the chat box on the website. There's a chat box that pops up. Reach out to us. We'll get your message. I would contact you and get the forms across to you as well. So thank you very much. The program will continue subsequently in coming weeks, inshallah. Right. Thank you, everybody.
Thank you, Imran.
All right. Have a nice day and bye.
Thank you, Imran. Bye.